big world out there. How are y'all doing today? Welcome to the month of July. Woo! Hey, great big world. So look, as you all know, welcome to Saturday. It has been 7 whole days since I seen y'all. If you've encountered some highs, some lows, some disappointments, don't worry about it. Keep your head up. Thank God that you made it and you are still here in the land of the living. It doesn't get any better than that. OMG. It's been 7 days. I really missed you all. Yay! We got a great show for you today. We got a lot of great shows for you this month in all. But we're going to kick it off with some concerning documents for taxes and how it affects your tax situation. So you don't want to miss out on this information. So get your questions ready, take notes, post, do whatever it is you need to do, because I'm ready to get those questions answered. So you know I'm going to start with some fun facts. And I kind of find some of this interesting because it also keeps me abreast up on what has been going on in the past. So, in the 1830s, it was an Ohio physician, and his name was John Cook Bennett. And he believed that ketchup had medicinal properties. He promoted ketchup as a cure for various ailments, including indigestion, diarrhea, and jaundice. Medicine was popular for a time, but it declined in the mid-19th century. Can you believe ketchup was once medicine? That's probably why I don't even like ketchup now, but whoa, to know that it cured jaundice and diarrhea and medicinal properties, that's something to think about. I thought it was pretty interesting. Another fun fact is, did you know that cheetahs are the fastest land animal and can reach speeds up to 60 to 70 miles per hour in short bursts? Wow. Like a cheetah. Just think about that. With all the wild land animals, it's a cheetah. Yeah, so, just wanted to give you some of those fun facts, lay it out on you. Hope you enjoyed that. I enjoyed learning about it, especially the catch-up one. Again, welcome to month 7 of the year, which is the month of July. And I want to say happy birthday to everyone out there that's celebrating birthdays in July. I have a lot of shout outs for birthdays, so I'm going to just wait until it gets closer to everyone's birthday. But a birthday that's coming up that I'm going to talk about is one of my best friends, Coach Tommy Myers. Happy birthday, baby. It's coming. I'm wishing you peace, blessings, love, and prosperity. And also, did you know that the month of July has 2 national holidays? We already know about Independence Day, but that second national holiday is my birthday. Duh. Like, if you didn't know, now you know. My birthday is in July, and it's July 20th. So yes, that's another national holiday. You need to request that day off with pay or use PTO because it's a national holiday. Wanted to let you all know that as well. So, I got some announcements for you before we jump into this epic show. I like to keep everybody abreast. Time is flying past us. I literally remember when it was the month of January. We are in month 7. Like, it is almost Thanksgiving, people. But what I want to let you know is that corporations, that's anybody filing out on the 1120, 1120S, 1065, if your extension was filed in March and your extension form number is 7004, you have exactly 72 days remaining before your returns need to be completed and submitted to the Internal Revenue Service. Individuals, Extensions, if they were filed for you in the month of April, and you're on extension form 4868, and you file out on form 1040, you have exactly 102 days remaining before you have to have your returns completed and submitted into the Internal Revenue Service. The second quarter just ended June 30th. So if you have any payroll reports or those estimated tax payments, those need to be due by the 15th and the end of the month. That also needs to be submitted to the Internal Revenue Service and also the state you have payroll in. Please don't forget to comment, like, love, share the content. It's free information. It's important information. It's something that's going to help us all. Also, if you have not done so, please go on over to YouTube and subscribe to the Anointed Accounting page. All of our all of our past videos are there, and every time we do a video, we upload it to our YouTube page. I just wanted to give you all those brief announcements. Now, time to get into that nitty gritty, right? Like, can you tell I'm excited? And I'm excited about informing people. I'm excited about letting people know what is going on with their finances. I think it's so important. So a lot of people think that once April 15th gets here, tax season is over. That is a bad misconception. We're never really out of tax season. Last week I spoke briefly about certain information and certain payroll documents that you would need to be aware of to not have a consistent domino effect going in towards the negative. I only spoke briefly about it, but that brings me to our topics for today, because I decided that since I briefly talked about this in the past, I didn't really touch on it how I needed to touch on it. So I want to touch on it now, just to let you all know, more so being aware of why your tax return looks the way that it looks. Everything starts and ends with a transaction. There is a beginning and an ending to everything. I've noticed, being in corporate America, that not only have they taken the onboarding processes from new hires, where they had training, not just for the position, but you had like a day and a half training, maybe 2 days, when you sat with payroll and HR and you asked all questions, and then after you asked these questions, you were able to get help when it came to filling out your forms W-4, W-4, or whatever state you were in, and form W-9. They also used to talk about this in school. I remember when it used to be talked about in economics, and then in some accounting courses, all financial courses, they talked about this, of course. But today, it's like it disappeared. No one talks about it. And throughout my journey of being an income tax preparer, I've learned that individuals only ask questions about their tax return if they're not getting a refund. That's the only time questions come about. Or if they are getting a refund, why isn't it the same amount or more than it was in prior years? Or how come someone else's refund is better than theirs? We're going to talk about those topics later this month, but I want to start you at the beginning, because that's where it starts at. It starts when you get a job. It starts when you get hired. It starts when they give you your onboarding letter to sign if you're going to come on board. It's everything starts right there. And so the information that's collected should flow over to certain documents. So, of course, I can't cover every state. So, I am going to talk about the state of Illinois. So, when I talk about forms, and I'm going to also try to share my screen. I'm doing something different, as you can see. I'm trying to move up in the world. So, I'm also going to share my screen to see if you all would be able to see the documents that I'm speaking about. And if I cannot share my screen, and it doesn't look like I can share it, darn it, I will upload the documents to my page, and it'll also be on my website, so you will know. But I'm going to talk about 3 forms today. I'm going to talk about Form W-4, I'm going to talk about Form ILW-4, and I'm going to talk about Form W-9. All of these forms has an impact on your tax return. So, without further ado, and again, I'm just trying something new here, trying to see how we're going to get things rolling. Hello, Benita. Thanks for tuning in. So, we're going to talk about Form W-4. That's the very first form. And that form is generated through the Internal Revenue Service, which is the lovely IRS. Form W-4 is actually called the Employee's Withholding Certificate. That's the name of that form. It's issued to any employee to inform the employer, which you're the employee and you work for someone, inform the employer about your tax situation. That's the first purpose of that form. The second purpose of that form is your federal withholdings are reported to the IRS, and that's why this form is so relevant for your actual tax returns. It's so very important. Now, when you look at Form W-4, and I'm going to break it down section by section, and I'm sorry you can't see it. I do apologize for it. Or maybe I can just print it and hold it up and let you see it. Let me try to do that. I'm going to try to do that. Print that form so you can see it, because I want you to get an idea of what I'm looking at, and instead of just like, okay, what's going on and I can't see it. So I'm going to print this form for you. But as it's printing, when you look at the first part of Form W-4, it has on there where you need to enter in your personal information. And when you're entering in your personal information, that's just basically letting the Internal Revenue Service know your credentials. That's your first name, your middle initial, your last name, your social security, your address, city, state, zip, whether you are single, married, filing separately, married, filing jointly, qualified, widower, or head of household. There is also a box in section 1 that says, does your name match the name and social security card? If not, you need to contact the Social Security Administration at 1-800-772-1213. Sometimes some issues can arise because of the name. And if the name is not correct, it's not going to be recognized by the Social Security Administration, because they have your name as one thing and you're reporting your name as something else. And then you may get a kickback from the Internal Revenue Service. So, part 2 of Form W-4, and I'm sorry, I'm still waiting on this form to print. I don't know what's taking so long, but that's why I'm giving you as much detail as possible. So when you do look at it, you will be more aware of what's going on, how to fill out this form. But before I get into part 2, let me just give you some more information, some beneficial information about Form W-4. Now, some people say, well, I done started a job, so what if I did not submit Form W-4 to the employer? Well, first, the employer is required to retrieve a W-4 from you. But if, for any reason, you did not submit Form W-4, your employer is required to withhold taxes from your wages, and your status will be single and zero. They're required to do so. So if you think that you're getting away by not submitting that form, in all actuality, you're not. Because there are certain guidelines and rules and regulations that the employer has to follow, because they too have to submit information to the IRS. Another thing that's so important about Form W-4 is that there is no limit to how many times you can submit this form to your HR or payroll department. Whenever there is a change with your information, you need to submit Form W-4. So if you got married, submit a new W-4. If you had children, submit a W-4. If for some reason you did a name change, submit Form W-4. If, unfortunately, your spouse deceases, submit Form W-4. You have to keep submitting this form whenever a change comes about, because again, this form will have a domino effect to how your taxes are filed and completed. So, and what the IRS says is that the IRS says there is no limit to how many times you can submit this form. As a matter of fact, the IRS guidance statutes says that any changes that are made have to be made and submitted within 30 days. So you want to make sure you get that information in to your employer. Now, let's just say for some odd reason there's something going on. The IRS will allow one stipulation when it comes to withholding taxes from your wages. Some people think that you just go exempt and they don't hold your federal withholdings. But the IRS has a couple other reasons how they would determine your tax withholding. One exception is the IRS determines that an employee does not have enough withholdings. They will notify you to increase the amount of your withholdings, or you would be issued what they call a lock-in letter. Now, this letter specifies the maximum number of withholdings and allowances permitted to your employer. So, the example that I'm going to use is, let's say that you submitted Form W-4 and you did single and 9. Well, the IRS can come and say, no, we're going to lock you in and submit this letter to you and your employer where you're single, and the maximum number that you can withhold, the maximum allowance that you can hold may be 4. But it's going to totally be at their discretion. Totally going to be at their discretion. So while you think you're getting over, your chances are you're not, because someone is always watching. So it's so important that you take heed to this form, because this form at the end of the year, if you're on a Form W-4, you're going to get issued a W-2. What I like to tell people is that when you get your last check stub, you hold your check stub. You keep all of your check stubs, but you keep that last one, because when you get your W-2 in the mail, they should mirror each other. They should look exactly the same. If it does not look the same, there is an error, and you need to immediately contact your HR and or payroll department. Okay? Now, since we're talking about your W-4, whenever you get hired and you get a job, each job is going to issue you a form W-4 because they have to know your tax withholdings and your tax situation. It's very important that they know this information. So I already told you what goes in box 1, which is your demographics. Your first name, middle initial, last name, social, address, city, state, zip, and your filing status. So that's very important. Now, box 2 says multiple jobs or spouse work. That section a lot of individuals overlook because some assume, well, my spouse is working, so my spouse is going to fill out this form. Oh, well, I don't have to report that I have a second job. They're going to do this and they're going to do that. Well, here is where I am going to educate you, okay? Because what happens is job 1 does not know about job 2 at all. And job 2 don't know about job number 1. So at the end of the year, when you get your W-2s and you file your taxes and you potentially owe, you want to know why. Well, that's because job 1 was withholding enough withholdings, but your income has increased, which may or may not have taken you into another tax bracket. If it has or hasn't, still job 2 needs to withhold the right amount of withholdings. And the only way that they're going to know to withhold the right amount of withholdings is if you tell them in section 2, I have 2 jobs. You're going to check box C. And box C says, if there are only 2 jobs total, you may check this box. Do the same on form W-4 for other jobs, which basically says that you're going to tell job 1 you have 2 jobs. You're going to tell job 2 you have 2 jobs. You're going to hit the box on both forms because when it's reported, enough withholdings are going to be withheld on the federal side for you, period. So it's so important that you check that box. If that box is not checked, chances are there may be a deficit on your behalf when you file your tax return. Don't say that I said it's going to be a definite deficit. That's not what I'm saying. Everyone's tax situation is different. And we're going to talk about that throughout this month because I'm going to tell you about your filing statuses. I'm going to tell you what sits on your form 1040, and we're going to talk about schedules and all of that. I also have an event coming on the 26th about all of these documents and taxes that you don't want to miss out on. But that is section 2, so make sure you check both of those boxes. Now, section 3 is where you claim your dependents, whether that's a parent that you're taking care of, or a niece, an aunt, uncle, foster child, or even your own child. You put in your dependents there. It asks you how many qualifying children you have under 17, and anybody over 17, it asks you to multiply that number by other dependents by 500. So, here is what I tell people from jump. Depending on your income, and we talked about the income tax bracket, do single and zero so they can withhold the maximum amount. And let me give you an example. Let's just say you get paid weekly and your gross wages is $500. I'm not speaking about any other tax, which is Social Security, Medicare, FICA, state. I'm not talking about 401k. I'm not talking about insurance. I'm not talking about dues. I'm strictly talking about your federal withholdings. A lot of people assume that because all of these withholdings are calculated cumulative, that the IRS has taken all of this money, and that's not the case. The IRS has one section, and it's federal withholdings. So, let's just assume that your weekly pay is $500, and let's say your status is single, but you have 2 dependents, and you claim 2. Well, according to publication 15T, if you're $500, they won't withhold any withholdings. So you're making $500, and at the end of the year, because that's been your set amount of wages, there has not been any federal withholdings taken out. Now, let's take that same example and say you made $500, but now you did single and 0. Well, that's where they're going to withhold the max. So, instead of your check looking exactly $500, it may now be $450 because they're withholding the max. That's on job 1. Job 2 is going to do the same thing because it has to equal the amount of income that you're sending in and reporting because of the tax bracket that you're going to be in. Now, let's go down to step number 4 on the W-4. Step number 4 asks about other incomes that you have that's not on a W-4, whether that's pension, Social Security, child support, alimony. Those are other sources of income. And if you don't have withholdings coming out of that money, you can actually put an amount on that line 4A and say, I would like to have this additional taken out. If there's any deductions that you want taken out, that's going to be on page 3 of that form that you receive for W-4. Now, my favorite section in 4 is letter C. And letter C is additional withholdings. And I like additional extra withholdings because sometimes we can't make those estimated tax payments, right? Sometimes we just don't have that one lump sum to send in. But we know that we don't want to owe at the end of the year. So guess what? Where it says extra withholdings, you need to put an amount in that box. To help you better understand your tax bracket, it'll be so important for you to sit down with your accountant and or your tax preparer so they can go over your information and they can tell you, well, this is your tax bracket. This is what you need to have withheld. This is how it'll potentially look. This helps you get a better breakdown and a better understanding of what can potentially happen on your tax return. So when it says extra withholdings, that means that this is what's going to be withheld additional from what they're already going to be taking. So if you're at 500 and you're doing 0 and they take that $50, assuming you put $25 in extra withholding, that 50 is now going to be 75. Now, let's use that same example again. You had 500 and you got 4 dependents. However, there was no withholdings taken out and you opt to put $25 in there. That 500 now is going to go to $475 because you opted to put in that extra withholding amount. Step 5 is your signature and the date. Once you sign and date that, it is turned into your employer, and your employer will do their due diligence in reference to that form. So, don't think that by not submitting that form, they're not going to withhold federal withholdings, because they are. They're required to. If for some reason it appears to be a bit too much for you, that's when you need to sit down and fill out Form W-4. If you're going to have multiple jobs, you need to fill out Form W-4. Keep in mind that Form W-4 plays a role on your tax situation. Don't misunderstand Form W-4 versus Form W-9. And we're going to get into that momentarily. Now, I'm going to explain to you, actually, since we're in the great state of Illinois, I'm going to talk about Form ILW-4. Now, you may say, Shavonna, what is Form ILW-4? If you're in the state of Illinois and you're submitting Form W-4, 99.99999% of the time, you are going to have to submit the state form so state withholdings can be withheld. What is Form ILW-4? Well, Form ILW-4 is employees and other payees that the Illinois Withholding Allowance Certificate. So the name of that form is Employees and Other Payees Illinois Withholding Allowance Certificate. That's the name of that form. It's a lot. So we just break it down and say ILW-4. Now, as I mentioned, if you are an employee in the state of Illinois, you must complete this form so your employer can hold the correct amount of taxes for the state. Right now, we're at 4.95%. So if your gross wages is $500, no matter how many allowances you have, they're going to withhold that 5%. Okay? That's very, very important for you to know. If there's not enough withholdings being withheld off of that for the state, you may end up owing the state of Illinois at the end of the year. Again, consult with your accountant and your tax preparer. They'll be able to help you. They're able to access publications. You are too, because they're on the IRS website and they're on your state website. And I'll be the first to tell you, sometimes that's too much information to look at. It's overwhelming. Sometimes it's hard to read and one gets frustrated. I understand. I've been there. But because I've done payroll for so long, because I've been in the accounting field, because I don't have an issue with contacting neither the federal or state entities to get clarity, I'm in a position where I can inform my people, this is what you have to do. And this is what we can do so there isn't a domino effect. Now, when it comes to your Form ILW-4, one of the questions that has been asked to me, how long does your employer hold your Form W-4, ILW-4? Well, just as with the Internal Revenue Service, until you present a new form to your company, your employer, they're going to keep that form that you submitted originally on file. So if there's been any changes made and you haven't submitted that new document, they're not going to know. So it's best that you keep your job abreast of on any changes, because again, you don't want this affecting your tax situation, especially if you're one that is looking for a refund, right? You don't want any mishaps. You want to be able to make sure that the name matches, the Social Security matches, because down the long run, it will be an issue. It will be a problem. And if you don't create it on the front end, it's going to be HE double hockey sticks to get it all corrected on the back end. And it's going to be a time process. And you may not have that type of time. And again, it could be overwhelming. That's why you need to have someone that you can go and talk to that can instruct you how to do it, how it's going to be beneficial for you, and also help you along the way. Now, I do know that in some companies, if you go to your payroll department, some payroll representatives will show you or give you links to guide you to how to fill out your form. Depending on your tax bracket, I'm going to always tell you to do single and zero, and to potentially have a little bit more coming out, especially if you're one of the individuals that likes to receive a refund. Who don't want to receive a refund at the end of the year, right? You worked all year long, so now you want to enjoy. You want to maybe take a vacation. You may want to give somebody some money. You may want to buy a brand new car or a house. Whatever. You've worked for it. It's yours. So, in order to make it yours, these forms are so important because it starts at the beginning. There is no tax refund. There is no tax return if there is no W-4 and no ILW-4 or whatever state that you're in. So, we're going to make sure we fill out the state form. Now, some states don't have taxes, state taxes. Like the state of Florida does not have state taxes. So they wouldn't have a state form that you fill out. The state of Texas does not have state taxes. So you wouldn't have to worry about filling out a form for that state when it comes to working. Now, those rules differ when it comes to having a business. Don't get them misconstrued. So it's very important that all of these forms are taken into account and filled out correctly. Okay? So, when we talk about ILW-4, they usually give you all of the instructions on page 1. And then when you go to page 2, which is the allowance withholding worksheet, that's the worksheet that you fill out to submit. So, it's general information. Step 1 is just your allowance information. Who can claim you? If you're 65 or not. How many additional withholdings or allowances are you going to have taken out? How many basic allowances are you going to have taken out? Section 2 of that form, of course, wants to know about you and your spouse. If there's any additional deductions. How to divide the amount of your deductions by the percentage. So, when you do submit this form, all of the correct allowances that's coming out, you will be taxed correctly on that form. If you want extra money coming out, you're going to go to the bottom of that form where you're going to put in your social security number. You're going to put in your name, your street address. And number 1 says enter the total number of basic allowances that you are claiming from steps 1 through 4. So however many allowances that you're claiming, you're going to put on line number 1. If you have additional allowances that you're claiming, you're going to put that on line number 2. Again, line number 3 is one of my favorite boxes. Enter the additional amount you want withheld. So, if you want extra monies being withheld, you're going to want that money to come out of on this line, line 3. So let's use that same example. You got $500. You're going, doesn't matter what you're going, they're withholding the 5% for the state of Illinois. Now, because you may have additional income, you want to put, well, I want them to take an additional $30 to $45 out. That's the amount that you would put on that line. You will sign and date it at the end of the year when you receive your W-2. As you're looking at your W-2, you're going to make sure that what's on your check stub mirrors your W-2. You have to make sure that's accurate. If you don't and something is missed, you're opening up Pandora's box. And now that's causing an audit. And you're doing an audit on your payroll because something isn't matching up. It's so important for people to look at their check stubs when you get them. Very important. I know people have gotten accustomed to just waiting on that direct deposit to hit. If it's supposed to be this amount, then that's what they're looking for. But people neglect to look at that check stub, and then the questions come about when you file the tax return at the beginning of the new tax year, and the results are not the results that you were looking for. So if we take the initiative in the beginning, because everything starts and ends with a transaction, we'll be able to catch this information. We're not waiting until the last minute. So it's so very important that we do that, okay? So if you're on Form W-4 and ILW-4, do know that you're going to receive a W-2 at the end of the year, and that W-2 is going to be filed on your tax return. Also, the information that sits on your W-2, that's already been submitted to the IRS. So they already know. They're just waiting on you to do your due diligence and file your tax return. Okay? That's what that means. Now, Form W-4. Let's talk about that form. Oh boy. You know, I could do a whole show on just Form W-9. I'm sorry, W-9. I could do a whole show, but I'm not. Not today. Because again, I start and end on time. So, W-9. What is Form W-9? Form W-9 is the identification number and certificate. It's a request that you submit to someone that you're doing work for and you're making more than $600. This form is not to be confused with W-4. If you are on Form W-9, there are absolutely no taxes being withheld. What you have told this company is that you are considered an independent contractor and you are going to pay your own taxes. Now, what sits on Form W-9, Shavana? Well, of course, Box 1 says they want your name. You have to put your name there. Period. That's important because when they cut you your check, whether it's weekly or bi-weekly, they need to know who it's going to. Because you're an independent contractor, let's say you're a sole proprietorship, you may not have a corporation. So you don't have to put anything on line number 2. You can leave line number 2 blank. Let's say you do have a business though. Let's say the name of your business is I Get People Rich. That's the name of your business that you're going to put on line number 2. Section 3A of this form is so important. It asks, as I mentioned, are you an individual or a sole proprietorship? Are you a C corporation? Are you a S corporation? Are you a partnership? Is this a trust or estate? Is this a LLC? Which class of an LLC are you, or other? Because they need to know who they're giving this 1099 to. Who is it being issued to? When you submit this form to the individual or company that you're working for, they need to know how it's going to look on the back end, because they too have to do their books. So when they cut these 1099s at the end of the year, they need to know, are they sending it to the corporation, the business, the individual? So when we get to line number 4, it's asking for exemptions. And exemptions is included on page 3 of this document. You could read closely into it so you can know what other exemptions you can put on this form. Line number 5 is your address. Line number 6 is your city, state, and zip. And if you have an account number with that actual company, you can put it there. If not, don't worry about it. Now, what's very important about this form also is part 1 of this form. Because on this form, it's going to ask for either your social security number if you're an individual, or if you're operating as an S corporation, a C corporation, and you have an EIN number, your EIN number needs to go there. So, for example, let's say you contract out Anointed Accounting to come out and do some work for you. We invoice you for $1,500. At the end of the year, you're going to cut Anointed Accounting a 1099. So you should have this form on file that has the name of the business, the EIN number, and all the demographics. At the end of the year, you're reporting to the Internal Revenue Service that I'm not responsible for paying taxes on this $1,500. It's going to go to Anointed Accounting. It's up on Anointed Accounting to do their due diligence and report the income. So any person or persons or company that does work for you and they're on a W-9 and you have spent more than $600, you need to issue them a Form W-4. I'm sorry, Form W-9. Now, a lot of people ask, can they substitute Form W-9? Yes and no. And let me tell you what the IRS says. The IRS says you can substitute this form and develop your own form. However, the substitution that you do has to look similar to the original form that the IRS has already developed for Form W-9. It has to satisfy all certification requirements. Now, a valid Form W-9 or substitution form must contain the payee's name, their TIN number, and they need to check the box that they and date it that they are not making any type of perjuries. They have to also sign that and give that to you. When you collect this form, you also need, if it's an individual, you need to take a piece of ID and a social security card for your records. That's proof, that's validation that you're not stealing information for one, but if you ever get audited, you want to show that you're in compliance, that, hey, I have Form W-9 along with the driver's license, state ID, and social security card. You may also use a passport, but make sure you are able to get all the information that you need that's going to tie to Form W-9 that's being filled out. Now, you ask, who should fill out Form W-9, Shavonna? As I mentioned earlier, an independent contractor. So I would be considered, Anointed Accounting would be considered an independent contractor if someone came out and got services from me. If that company paid me more than $600, they can issue Anointed Accounting to 1099. Let's say I made $600.54. Guess what? They can give me a 1099 at the end of the year because they too do not want to pay taxes on money that they don't have to pay taxes on. Okay? Now, I just told you anyone making more than $600 supposed to be issued a 1099. If you've worked for more than one company in the calendar year doing independent contractor work, each company that you work for needs to have Form W-4. Form W-9. I apologize. I keep messing up the numbers. But they have to have this on file. Do not do work for a company and get paid and it's not right. Don't do that. Make sure you submit Form W-9 because at the end of the year, when you get your 1099, It needs to match up with any deposits you've gotten or any checks that you've gotten. It needs to mirror each other. No, it won't be any taxes taken out, but that gross amount, if it says $8,000, that's what that 1099, NEC, or miscellaneous needs to say, $8,000. Now, the next question that people ask about this form is, how will Form W-9 affect my taxes? Ooh, yes, it will. Again, as I mentioned, absolutely no taxes are taken out. Federal, state, Social Security, FICA, or Medicare. None of that is taken out. So, when you submit W-9, the company will not withhold any taxes on your behalf at all. It is going to be your responsibility and due diligence to withhold the federal amount, the state amount, and your 15.3%, which is Social Security and Medicare. Once you withhold that, you can submit that as an estimated payment on the EFTPS filing system, or you can submit that through your IRS ID Me account. And again, if you get with your accountant and or tax preparer, they're going to be able to show you how to set this up and fill this out so it's accurately done. That 15.3%, because you are an independent contractor, that's you paying your Social Security and Medicare taxes because you don't have anyone helping you with fringe benefits, whereas someone receiving a W-4 has fringe benefits because the employer is paying 7.65%, which is Social Security and Medicare, then whereas you're not having anyone to match, you're paying it all yourself. When you're receiving a W-2 at the end of the year, that employer is matching your 7.65%. So that's where that 15.3% comes in at. So that's how this will affect your taxes, because you need to have those monies set aside. That's where those estimated tax payments come in at. You can also make those payments every quarter. If you know that you're able to save that money and not touch that money and put it in that payroll account, so on the 15th day of the 4th month after the quarter ends, so let's just say the second quarter has just ended. So this is that 4th month, because a quarter is 3 months. So this is that 4th month. By the 15th, you want to have in that estimated tax payment for all the monies you've made within that 3-month time span to cover the taxes that you've made. Now, that goes for any month, not just those 3 months, but a lot of people make estimated tax payments quarterly. Some people also make their estimated payments when they get paid because they don't want to get bitten at the end of the year when they file a tax return. They want to go ahead and get it out the way and say, look, it's done and over with. Everybody has been gotten their money. Also, what you need to know is that when you're paying these taxes, keep a record of it, keep a receipt of it. Don't lose that receipt, because when you file your taxes on your tax return, it's going to ask, did you pay estimated tax payments? It's going to ask for the day that you made that payment, the amount that you made the payment of, and it's going to ask for that confirmation number that you're giving after making that payment. So keep those receipts. If you need help with that, that's where your accountant and or tax preparer will come in and assist you with that. Now you may say, Shavonna, does Anointed Accounting help with estimated tax payments? Yes, we do. We actually make a lot of the estimated tax payments for our independent contractors, as well as for the companies we do payrolls for. So we take on that responsibility because we understand that life happens, and when it's about giving up money, you may not be so willing and eager to give up that money. But if I call and say, hey, it's time to make this payment, you may fuss about it, but we're going to go ahead and make that payment, right? So that's so very important. Let's make that payment. We don't want to have neither state or IRS coming after us about not making a tax payment, right? And when you file your taxes, you don't want to be at a deficit. And that's where those long conversations come in at. So, I know I covered a lot of information today. Maybe an overload of information. You may even have to listen to this a couple times just to get everything that I said. But I know that we covered Form W-4, which is from the Internal Revenue Service. We covered the state form, which is ILW-4, which is from the state of Illinois. And we covered Form W-9, which is universal. It has nothing to do with the state at all. If you need more clarity, if you need more assistance, feel free to give us a call at area code 312-837-7219. Also, you can visit our website at www.anointedaccounting.com, which is www.anointedaccounting.com. Now, I keep reiterating, everything starts and ends with the transaction. Now you see why I say that. Because in order for your tax return to look a certain way, you have to be on W-4 and whatever state form you're filing out on. You also have to have that W-9, because if you're that independent contractor, you're going to have to submit more than that W-9, that 1099 to your preparer. That's where you're going to get more involved with expenses, receipts. You're going to have to do things more different than what someone does who receives a W-2. They don't have to keep up with their expenses, because if you're on a W-2, you can't report your expenses. But if you receive a W-9 and at the end of the year you're getting a 1099, you can report those expenses. So it's a lot to all of these forms. These forms can impact your tax situation, good, bad, and or indifferent. So do not hesitate to ask those questions. Again, I know that every job does not offer this onboarding training. Anointed Accounting, we offer this training. We're big on information and informing our people about how to help their tax situation. You can also go to the IRS website, which is irs.gov, and search Form W-9 and search Form W-4. They have it in PDF format. You can also read those instructions. And again, if it begets too much jargon, too much information, you just want something straight to the point, give us a call. That's what we're here for, okay? Now, I don't expect for you to become an expert in this. That's not my game plan. However, I want you to be informed, and I want you to be aware of how things affect your paycheck stub, affect your day-to-day living, and how it affects your tax return. And something so small as a form has a major impact on that, okay? So, thank you for tuning in today. I totally appreciate it. I appreciate the love and the support. Please like, share, comment, send me questions, send me suggestions. If there's anything that you want to know about, any questions that you have, send us a message. That's what we're here for. Are we accepting new clients? We don't turn down anything, not even our callers. If you have not done so, please go over to YouTube, search out Anointed Accounting, and subscribe to the page. These videos only last 30 days on Facebook On our YouTube channel, it's indefinite. Share the income about your income, meaning contact Anointed Accounting. It's going to be hot, so be safe, be careful, check on yourself, love on someone, and I'll see you in 7 days. Bye!